Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a few minutes past 1100 UTC. A really big shout out to everybody joining the stream live today, as well as a special mention for all of our Binance fam who are joining us from over at Binance Square. I think we had about 10, 11,000 of us live on Monday, which is awesome. So a big thank you to everybody that joined the show, as well as all of you that are joining this show. So for anybody that's new to the program, Monday we focus quite heavily on education, as well as the fact that we set our trading plan up for the week based majority on Bitcoin, all right? But we also look at the equity markets, we look at the turbulent news that may be in the week ahead, none more so than today as we face the FOMC rate decision. We're going to cover that in a minute, but we do want to make sure that we're going through everything for our alt request show as well, right? So if you do have any charts that you would like me to take a look at, any tickers, then let me know and we can take a look at those. But before we go forward, do remember that you can get involved with the Bird Nest campaign through our partners over here. So you can see on the screen at the moment what you need to do. You can also find a pinned tweet at the top of the Bird Nest profile showing you how you can be involved. You can get 600 free SOPH or HUMA tokens for this. All right. And for doing that, you just need to deposit, make your first trade, gobble up your tokens. Great time to do it, because especially if we really do get this resurgence, which we're going to cover shortly after we have the FOMC, we're going to decant the key news events that we have going into the week as well. Okay. So without further ado, let's jump into the charts and let's say some hellos to some of you wonderful people in the chat. How are we doing, everyone? Those of you in here, Crypto Tony. Good morning. Loving the tune, right? Awesome. Big shout out to QBS Crypto who sorted that one out for us. How are we doing? Yarrick, how are we doing, my friend? Let me know. Hit me up on Twitter, Cryptoni. I'll find out the name of the song for you. I absolutely love it. He found it for our Congress event last year, and basically I stole it off the back of that. Yarrick, my man. Yeah, the kettle is on, my friend. The tea is brewed, and we are ready to rock and roll. I'll try not to let it go ice cold this time. So let's just take a quick look at some of the tickers. Obviously, we are going to cover Bitcoin. That's going to be where we're going to start. We're going to cover Ethereum. We're going to cover BTC dominance as well. Now, looking at this, we have had a few requests coming. I'm just waiting for the team to pass those through to me. Let me just take a look. But if you've got anything that you want me to take a look at, guys, please do just pop it in the chats. We'll make as much time as possible to get that done for you. And just getting the request list in. Now, what have we got? We've got Solana. Nice. Okay, what else have we got? Okay, one coming in for Doge, eh? Let's take a look at that old school warrior as well. Boom. What have we got here? We got a request for AXGT. You know I'm going to throw in a cheeky little look at our crew at Estate X. Again, just been gobbling this up at these levels. Pretty crazy, actually. Yeah, brilliant. And then just a reminder at the end of the show as well, if you do want to kind of come on and take a look at the deal that we've got going with OKX at the moment, grab your free tokens. The great thing about that is you do get a month's free access to the Birdnest paid group as well. Right, so let's take a look. Okay, yeah, stable. Okay, yeah, I've seen this one come about. Actually, let's take a look. I think it was KZM that brought this to our attention, head of our fundamental team. So let's take a look at that. I'm not really sure on the ticker, but if you do know the ticker, do let me know. STBL, I'm sure we can find one of those. Yeah, launching on Kraken. They've got a few other ones coming in as well. Yeah, it was mentioned today in the Nest. That was from our wonderful fundamental guy. We can take a look over it. Excuse me, kind of take a look over at that as well. I think it's on base, but I will definitely take a look at that for you as well. And then we're going to take a look at ENA, for our friend G-Scar. Awesome. All right, well, let's just very, very quickly do the little bit that, I know everybody's kind of excited about the charts, or hopefully anyway, but really do want to take a look. Thank you, Yarek. Yeah, STBL. That's what I've got here as well. Perfect. Let's just take a very quick look at the news. Why is it important today? Well, we are through here. All right. We are on Wednesday, the 17th of September. Absolutely, time is ripping past. And why is everybody kind of gearing up for today? Well, we have the federal funds rate. Okay, this is the FOMC decision. This is where they're going to inform us of the US interest rate decision. Is it going to cut? Is it going to hold? Are they going to add? Look, if we look at the statistics, we're 96.8% on CME for a 25 basis point cut. If we then cross-reference that with the live data today from Polymarkets. What's really interesting about Polymarkets is Polymarkets are really, really pushing here. Let me just show you this, because basically FOMC today, that's the news, right? But I'm going to show you or tell you certainly my interpretation of that, how I've traded that over the years as well. Shy, hello, mate. Good to have you with us. Right, so I'm going to show you over here on Polymarket. So this is the betting market for what's coming up. And as we can see here, 25 basis point decrease, 92% priced in. If we look at the same data over at the CME group, that's now 95.8, all right? So here, 92%. What's really interesting is overnight, this has crept up a lot. Yeah, so this now says it's down minus 1% today. So it was up at 8% earlier. News yesterday, the strong retail sales data that came in pushed this right down to 2%. So there's new information we can see, because the betting markets are, betting markets, financial markets are the very best at pricing in information. Don't try and fight them. Try and learn from them and find out the direction that they're kind of pushing for and where the value is in the bet, all right? Same way with trading. Ultimately, at 7% here, I think this is pretty unlikely. It's not high enough of a percentage for me to warrant using this as a hedge, but this has ticked up overnight, which is really interesting information. Now, if we go and take a look at the CME data as well, this is interesting because even this has come down overnight as well. So if we look here, we can see here, this is now down at 94. This was up at towards 98%, all right? And it's creeping this side of it. They're not really allowing for this kind of higher lower cut here, but look, 6% on this one. So between that and Polymarkets, people are starting to think that Powell might come out today and say there'll be a 50 basis point cut. That would be, in my opinion, exceptionally bullish for risk markets, all right? For cryptocurrency, for the NASDAQ, technology stocks, Magnificent Seven example, all right? Mag 7, by the way, for anybody that isn't aware, they're the real big players in the equity space, right? On the technology front, especially Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla. They make up such a large portion of what has made the NASDAQ so strong. The S&P 500 as well, obviously. But our real focus at the moment being on crypto, as we can see. Let's start with Bitcoin. Now, just before I do that, I want to give you my reasoning behind why I'm a little bit cautious today for FOMC. Everybody's talking about the 25 basis point cut. I come from, very much a traditional market background as well. So we're used to kind of pricing this information in where the crypto natives aren't really in truth. So when you hear everyone, every person and their dog now on crypto Twitter talking about the fact that they're FOMC experts all of a sudden is quite funny. But I would just be very careful here, guys. The markets are exceptionally good at pricing in new information and will be much faster than you or your favorite influencer on Twitter. So just remember that if everybody thinks there's going to be a 25 basis point cut and there is a 25 basis point cut, is that really bullish? Okay. I don't think so, personally. I'm a little bit cautious about today. I'm hoping today gives us a little bit more of a flush than it does a major pump. I think like normal, you'll see that kind of initial momentum to the upside to trap a lot of people going long. Then I think the market kind of flushes out. Why? Not because the data's not good, but because the market expects the data. So, you know, the market was expecting the data back here, right? And we've seen this nice run up. Well, this could be the pump. Yeah, if we were going into the FOMC blind with no information, no idea on what it was going to be, then maybe we'd be around about here, and this would lead to this pump if we did get the 25 basis point cut. However, we know that the 25 basis point cut is heavily, heavily priced in. So the two options for, you know, the upside and downside surprise here is if they don't cut at all, that would be bad. Yeah. If they do the 0.5 cut, Craigie boy, how you doing, mate? But yeah, if they do the 0.5 cut, then markets will absolutely tear, I think, because it's still very, very lowly priced in. Like we saw 6% on the CME and 7% now on poly markets. They've come a lot closer to one another as well, which makes me think that that's more aligned. You could have arbed the difference yesterday. There was about 5% difference between the two. Would it not make that the Fed is not in control? Yeah, absolutely. There's a lot of stuff that plays into that, right? If we get this if we get the 50 basis point cut, then there's a few things, you know, and I'm not saying he would think this way, but Powell has been constantly hounded by Trump to cut these rates, right? Now, he's not cutting the rates because he's a twat like Trump's making him out to be. He's not doing it because he's concerned about inflation coming back up, and cutting into an inflationary environment is financial suicide, right? The Fed are watching different things as well. They've got a soft labor market, which they watch quite closely. So the fact of the matter is that the soft labor market, and the fact that, you know, actually there were some concerns, myself included, when the previous PPI came in really, really badly. And there was a concern that the cost of the tariffs are now washing through into the producers. The producers then pass that on to the consumers, right? But we actually haven't seen that. The previous print was good. PPI was solid. CPI was very good and flat. So if you're in an environment where growth is okay, you know, where we've got interest rates coming down, then as long as inflation's under control, and inflation is relatively under control, it's still above the Fed's overall target. But the soft labor market, there's not enough jobs, the unemployment rate's creeping up as well. So it just shows you that the catalysts have all aligned for this rate cut. Now what we need to watch, so let's say we get the 25 basis point cut, then what we then need to look for is say, okay, we got the 25 basis point cut, fantastic. Where does it come about now? The key thing then becomes about the press conference, Powell's tone, how he speaks. Is he dovish? Is he hawkish? Akin to being bullish and bearish, relatively, right? So if he comes on and he's like, oh yeah, I mean, not that he would ever come on the mic that excited, by the way, but if he, you know, leads to the fact there's going to be more cuts this year and they're very happy with growth and they feel like inflation's coming down to the target and the systems and metrics they have in place are keeping inflation under control, keeping growth up, and they've got, you know, they're not that concerned about the job market at the moment, maybe because of the fact, you know, there's the immigration issue in the US as well that's kind of affecting the jobs numbers. So maybe they do cut into that, but I still think 50 basis point cut is unlikely. So let's just run a scenario where we get the 25 basis point cut, market pulls back or does whatever or is relatively flat, then it all becomes about his tone in the press conference later on. All right, Michael, hello, mate. Good to have you with us. Overall, 200 plus points reduction before they stop, in my opinion. Nice, mate. I mean, ultimately, that would be super bullish. A few things we need to factor in is the fact that when, you know, tens of trillions of dollars need to be refactored. The debt needs to be refactored by the US by, I think, mid 2026, or certainly by the end of the year. So they're going to want to do something about the yield rates, right? You know, the yield return on the bonds and stuff like that. So I think it's going to be a little bit turbulent. We know we're not, seasonality wise, we're not in a great spot at the moment either, but I do think we have many, many different catalysts to factor in. But anyway, that aside, that's the key information at the moment. Where are we with the charts? Right, on to Bitcoin, right? I'm going to look at this here on the daily. First of all, we've got our nice little range that we're playing in here at the moment. Really, really simply, this was the key area we've been interested in. Price came back down. This is the high that was set all the way back here in January, beginning of the year. Then we had this key pivot point here. Yeah, look, key resistance here, broke above it, found support, closed below it, resistance, back above it here. And it just really, really simply for me, I'm then long to the next key liquidity, which was here. All right. I'm really, really keen to see Bitcoin stay kind of ranging around in here. I'm not that bothered about Bitcoin going and smashing and setting out all new all-time highs. What I want to see is Bitcoin just chill out, stay within this range. And by this range, I kind of mean this area here. Right, we can see we've got this nice area. What price has been doing here, running some highs back to the lows, running the highs back to the lows, up to the mid, loses it, retest, sell off, retest, back in the range, now expanding to range highs. Whilst Bitcoin is in there and we want to see Bitcoin dominance starting to drop, this is when we see the capital rotation into riskier assets such as alts. And that's where we really start to see these kind of super normal returns that would be expected of a high risk asset like cryptocurrency. So on a daily scale, things are looking really nice. Ultimately, you know, we've had our game faces on since we stepped back into the range. So this has worked out pretty well. However, 4 hour does tell us a lot here. And, or actually, remiss of me not to show you this. The reason we've got this range is it's an inside bar range. Okay. So let me shill you some stuff because I really don't get a lot of followers, which is fine. I'm not really that much of a Twitter whore in truth, but it is, you know, if it is of interest to anyone, I do post a lot of education material on here for free. And one of the things I want to show you, because I get a lot of questions about this, is at the top of the Twitter profile, you can follow me here at BC_Richfield, just as it says above here. Now, if you come down into this area here, all right, you can see we're live here at the moment. But if you come to the top post that's pinned, yeah, this is teaching you how to trade the inside bar pattern. And this is exactly what we're trading at the moment. All right. So just want to give you that context. I do pop across, have a look at that. Obviously, give me a follow if you like the content. But if not, and you're interested in the inside bar pattern, then there's a really good explanation of it there and how I use it. So that's this pattern here. That's the large external candle. The following candle, the high and low are within the range of the previous candle. It gives us two ranges, the mother bar range, which is the high to low of the mother bar candle, the larger candle, and the inside bar range, which is the high to low of this. Quite simply, we have our range here. What we're looking for is if price deviates the lows and steps back inside the range, we trade it to the highs, right? If we deviate the highs and step back in the range, we trade it to the lows. Deviation here, back inside, went to the highs. Look at the difference here, right? Look at how price was able to close outside the range here. Then price comes back down into here, fine. If we get back inside the inside bar range, then I'm looking to short it. However, we didn't. We held here. We found this nice expansion. And I thought, news catalysts aside, and obviously, you know, the fact for the day, because we're looking into the FOMC, this kind of breakout here is really interesting. We got a key liquidity above. I did expect price to break out of here, take out this liquidity here, and then come back to this area, right? We know that there's, you know, liquidity here. So a move like this would have been the kind of ideal clean scenario, all right? So price breaks out from this area, strong breakout, rejects here, which is natural. It's a key profit-taking area. It's a key swing higher, all right? We're also coming up into this consolidation, right, that led price to this large move lower. It was tested here and then retested here. We know there's strong selling going on here, and we can also see that there was buying, right? You know, if we take this as just a generalized area, if we try and embody most of the wicks, definitely buying going on here, attempted anyway, lose the area, retest it here. If we wanted to be really kind of, you know, include a larger area in this, then I would say that this area here is key, because this was the consolidation that led to the large pump. Support here, absolutely carved through it. This is what you want to see when you lose support or when you blast through resistance, is, you know, those buyers that were here have now been overwhelmed by the sellers, you know, in a massive way. When price returns to these areas, you can get a point of mitigation, mark out the swing low across here to the high and look for this area to hold, right? That's telling you that the sellers are still in control of this area here. So until we change that dynamic and get back above this, that's where I'm really interested in, all right? So we could achieve this With a break to here, price comes back down, finds support at this level, shows us that this consolidation where price was considered fair value, that's what happens when we range, right? We get these expansions, consolidations, expansions, consolidations. Same thing happens on the way down, all right? Then the consolidations are where price is considering fair value, right? The expansions are where price is seeking new value, yeah? So Bitcoin down here, large expansion. Now people, looking at it as, are we going to break out from this area and seek new prices higher? Is price going to stay in this area for a while because that's accepted fair value? Or do we break down from this area and head for the prior consolidation where price was previously considered value, all right? So I'm really, really flat today. Full exposure. I always tell you the positions, what I'm looking at, my trade plans for the week and such. And it's good to have that accountability from my end as well, right? But this is what I really want to see here. But I'm also equally happy for Bitcoin to just stay in this general area as we highlighted earlier. So not looking to take any open trades on Bitcoin at the moment. But I do think if we do close back inside here, yeah, that's 116229 here on OKX, right? We close back in here, then I do think that we start to come back down for these lows. The caveat for all of this today is FOMC, right? And the reason that this box is blue is you'll take note. Very old school thing to say. But Sunday, when I released the Bitcoin report, highlighted this as being the key area to hold for more upside at the start of the week or a flush down to this level here. What we can see is the market very kindly gave us both. Yeah. Tickled into this area. Beautiful, strong reaction. Gorgeous pin bar candle or hammer candle with a very short nose. Bullish engulfing candle. Closed back inside the range. I don't know what else you want apart from that. You could everything just spells it out on the chart for you here. If you wanted extra confirmation here as well, then the breaker candle was just absolutely perfect. Yeah, flat body of the high, price came up, flushed out liquidity out of the lows below this low here and below this low here, came into our key area of demand, held this area of demand, excuse me, strong expansion, closing above, sets a bullish area of demand here, sets a bullish breaker here, look at that reaction. Price just absolutely went. But for me, like I've said, big purple box, I'll leave this here for the next show. Safest play for me is to get back above this area here where we have seen prominent price action previously. All right. Oh, right. Quick sip of tea, and then we're going to rip through some altcoins. Lovely. Right. So we're going to take a look at Bitcoin dominance first. Then we're going to take a look at Ethereum, Solana, Doge, Axon DAO, StateX, Stable, and ENA. All right. If you've got any questions, guys, do pop them in the chat. If you've got any tickers you want me to take a look at, do pop them in the chat as well, and I'll try and get around to as many as I possibly can. Right, Bitcoin dominance. Excuse me. Rolling with a typical British end of summer cold here. We got a few nice days of heat, and now it's back to being grim. So what's key about this? I mean, this should be pretty obvious for most people. We got key trend line support here and also here. Breakdown from this one. We saw a nice run on alts here. This is what we want to see here, right? Dominance continuing to go down. This is my next target level here, around about 56%. But this is always a key level for me here, 57.71. We often see strong pivot points here, resistance and also support. It's a little bit more of an area than it is just a line, but I'm happy with a line. I know when we're down in this general kind of area to expect price to have some kind of resistance or support. Now, we ultimately just want to see Bitcoin dominance going down, 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 down. And if we get the price of Ethereum on the chart, do it in blue, we can see what a beautiful correlation this has, yeah? So, I mean, look at this one here. Excuse me. Bitcoin starting to lose momentum here. This is where price broke the trend line. We saw moving into this just that massive expansion. Then it couldn't hold, and then price ultimately ranged here. And we had this lovely divergence here, right? Because what you can see here with Bitcoin prices, it's going up, yeah? So dominance is, sorry, not price, but Bitcoin dominance is coming up here. And what we see here from Ethereum is it's kind of ranging. And we get this beautiful power of three range here. If I was to, a little bit of advice for people as well. If you're struggling with support and resistance levels and drawing them, using a line chart can really, really help because it's easier to see on a line chart, for example, an area whereby you can see flat lows. just using this as an example, right? See those flat lows? Clearly support. And then you can see here where you then find resistance. So you can just put the lines on that like that. You can kind of go, okay, interesting area. And then coming back to that, you can see it just a little bit clearer than if you were to use this on a candle chart. Yeah. See the candle chart's a little bit, I mean, you'll start to get to the point, you'll see these kind of things in your sleep, right? But you can see the difference here if you do move that across to a line chart. Just a lot easier to find those extremes. But anyway, before I digress too much, the reason this was important, this move, is because dominance was continuing to move up, but Ethereum's price really wasn't moving down. Now let's look at the similar scenario here when we had this move up. They're not too dissimilar, even if we look at the same length from here, even if we say take it from here. It's moving up roughly the same kind of way. It's grinding up quite nicely, healthy, balanced price action. But look at what happened with Ethereum here, right? Ethereum from the same point had a really aggressive sell-off, because the dominance of Bitcoin was sapping all of the liquidity out of the market, and it just wasn't coming into this. Naturally, the price then comes down. But look, when we got this pump here, this was a key indicator as price just held here with Ethereum. Beautiful power of 3, ran the range high, back to the range low, stepped back in the range here. And then as soon as price lost this support and started to come down, look at this amazing move up here from ETH. So that's why we're interested, for anybody that doesn't know, in Bitcoin dominance. Let's get these all cleared up. Perfect. So we just want to keep seeing this come down, right? If it comes up, it's good for Bitcoin, but not really good for alts. And in my opinion, not just my opinion really, but the super normal returns here are to be found in altcoins. Maximus Wildmore, that is just the most awesome name. I love it. Yeah, of course we can, mate. You're very welcome, and thank you for asking so politely. AVAX, I love AVAX. Made a large portion of my career in crypto trading AVAX on an intraday basis. Actually, I've always found it's one of the cleanest assets to trade. Right, so let's stop pissing about, and we're going to get on to this. Right, we got our crew with us over at Binance, haven't we, as well? Let's smash some Binance charts up and take a look at what the plan was on Monday when we had our Binance fan with us then as well. So this is the conditions that we laid out. We want to see this area hold on the daily scale. So we can see we've got that here. This was the target for the high. These, what look like some kind of amazing oriental symbols, will become clearer on the lower time frame as we laid out the plan on the 4 hour. But as it stands, as we can see here, ETH just kind of chilling in this area at the moment. We had the expansion above here. This was the first nice impulse move higher that we saw. All right, so now we've got the bullish gap. So that's what the green box is. The green box is the key area of interest. While we engage with the green box on the daily, I'm using the lower time frames then to find potential entry mechanisms. So 4 hour, what was the plan? Well, the plan was really, really clear. We can see by the wonderful blue squiggles that we didn't get it, yeah? So this was the high, was the target. Why? This is the high that led to the move lower. What do we see if we're bearish? We're looking for the bullish candles here to keep price suppressed. All right, what do I mean by that? Well, mark the bullish candles. I'm just going to keep it in purple so it's clear anyway, but I go from the low of the body to the top of the wick. If they're consecutive candles, I include all of them unless it's a ridiculously large amount. So this area here, I think of it like this. Buyers tried to step in here. We rejected at this bearish gap. Price sold off. When price revisits these areas, those buyers that were here can now close that position out or mitigate that. Yeah, they can close that position out for little or no loss and then say, you know what? I'm very much a Bayesian thinker, somebody that takes on new data, that processes new data, that allows them to plan that in. And they think, well, why? I thought we were going bullish here. I mean, who didn't? Massive run up like this, beautiful return to this gap, high time frame level, let's go. But it didn't, it broke down, fine. So you were wrong here, price broke down here. When you return to here, if you've held through that drawdown, you can now get out and say, you know what, market looks heavy here. I haven't got the information that I wanted for this to go long, so price has broken down. So we look at this area to be the key point. This here should suppress price lower, all right? So our key interest here, because I don't want to short into a higher time frame support level, it's just stupid, right? Sometimes it might work, but you'll get, infinitely hurt more than you'll get good results doing stuff like that. You want to line up where institutions are involved, where you see these big moves happening, where it makes sense for players to enter the market. So while we're in here, quite simply, this red area, we expected to reject price. This is from Monday's show. So what do we want to see? We can see here, this area to be closed above, used as support, then we trade to this area and we look for exactly the same thing here. That is still the plan. All right. The only kind of extra bit of spice that we've got in here at the moment is if I'm looking at this breaker candle here, and I do like this. Right. Why do I like this? Well, this was the up move before price swept liquidity, right? Then we had the strong move above. Now, if this area holds, I think this could be the base of the resurgence higher. But I don't want to then just trade this small move here into resistance, not unless I was doing it intraday, right? Day trading in and out in the same day, then wait for price to get back above here. So I'm still following this plan here. I want to see price above this consolidation. Then I think we can really start targeting some highs. Gordon Blake, hello, mate. Love the show. Awesome. Thank you. What's your take on Bank of England limiting stablecoins to 10, 20k per head? Will this include crypto such as Bitcoin and alts? My thoughts about the Bank of England are probably a little bit too explicit to be put on a daily live show before the watershed. Look, banks all over the world right now are scrambling with the central bank digital currency approach, and limitations of digital currency. Probably the biggest threat in their existence is coming in the rise of Bitcoin and now the mass adoption that's happening with cryptocurrency. So as is typical with large institutions, what the banks are doing is they're living off the fact that they've just had this golden age where they've just been charging people tons of money in interest in mortgages and loans and bits and pieces. And actually, as investment vehicles, they're not actually that great. Your hedge funds, bits and pieces like that, they're your real kind of animals on the ground in that space. Banks are particularly great at it. Banks have just had this kind of slightly laissez-faire attitude to it where they are, basically they're making money in so many different ways, charging people interest. They don't need to be the greatest investment vehicle in the world. And that means that often they're very, very blinkered. With that type of stuff, you typically have this kind of fall of Rome effect. You have this cronyism that comes in. You don't necessarily have the best people in the best places. Those people tend to be very risk averse. So what you get is you then get a situation where they try and deny it, and then they panic when they find themselves under threat, and they bring in these kind of policies and control mechanisms to try and stifle people from doing it. Ultimately, I think they're going to struggle with it. I don't think they understand the space particularly well, but I do think, England, Britain, very, very sadly, because it's a country very, very dear to my heart, definitely not what it's become, sadly, for many different reasons. We used to just be this wonderful place, a place of acceptance, a place of real cultural diversity, right? A place where we didn't have the hatred that we have now. We didn't have the retards in charge of the company that we had now, unfortunately. And we've had it for a long time. We've been abused as a country that was once a very, very great place to be. But I think it's getting worse, unfortunately. I think other countries are offering so much more of an open mind to this. I think Europe have lost the plot with what they're looking to do with MiCA. They're being more restrictive than they need to be. And they're just opening the doors to smarter countries. You have to, China are looking to embrace it a lot more now, right? I mean, when you're looking at communist-driven countries that are looking to be a little bit more open-minded than the West, I think that's when you've got to say that the West are really kind of messing this up. I think America are back on track with this now. I think, forward-thinking Trump. No, Mehmet, not for me, mate. I didn't vote Brexit. I very much, I've got family all over Europe. I was very much proud of the fact we were part of the European Union, and I do think that you have greater strength together than we do apart. But again, just poor leadership all around, isn't it, unfortunately? But they do need to change that. But I won't make it too political. But to answer your question, Gordon, I think they are going to try and limit people's access to digital currencies ultimately, because they're very, very terrified that they don't have an understanding really of them. So it's very, very sad. There's certain ways around it, or if not, unfortunately, just like a lot of other people, it's going to end in a mass migration of the best talent and wealth out of the country, which we've seen already. Loner Art Studio. Thank you very much, man. That's very good. Unfortunately, I say unfortunately, it's definitely not my realm of expertise. We have some wonderful people that do that for us, but always feel free to drop us out a message. We'll always pass your details on. Yes, you also that. Who voted then? I think Britain did very well under that campaign, like they did, like America did with Trump. I think they managed to activate a lot of very angry, necessarily poorly educated people, but people maybe they didn't have a great political view, and they used a lot of hate mechanisms and triggers, such as get our country back, very similar to Trump's thing of make America great again, blame everything on immigration when immigration is something that we really need here. Yes, it does need to be managed, right? And yes, we are taking on a lot of illegal immigrants and stuff like that, but at the end of the day, it's not their fault. If I was in their position, I'd be traveling halfway across the world to try and get the best life for me and my family. The problem again comes down to the politics. So I'm not really sure, mate. And as far as I know, Mehmet, most people I speak to a lot of people are very, very proud Brexiteers for the reason that they, believed all the lies and misinformation. Maybe they've changed their views now, right? But yeah, for me, I think it was a poor decision all round. But anyway, before we make this too political, anyway, yeah, MI5, poor bastards. I mean, with diminishing budgets and having the world's probably best, spy and intelligence network. But anyway, unfortunately, one of the things we need to do in life is try and put our energy into things we can control. And as much as I want to, and maybe one day I'll run for office, right? But I think unfortunately we can't. We just can't put that across. JG, yeah, it should never have been put to the population. You're right. Just as simple as that, right? Very, very simple. I think that's a really good point to end that on. Right, so what's going on here then? ETH, here's the plan. I think we get back above these consolidations here, and I think we can really, really start to go. I'm not going to look to start predicting timelines and stuff. We're going to learn a lot more after FOMC. FOMC could just light a rocket under price that goes, straight up. That's why it's really, really important to understand your strategy, right? Because if you're here at the moment and you're thinking, God, what I don't want to do is miss this massive pump, right? But then I also don't want to be overexposed here and see a large dump. Well, you can always scale in. Yeah, let's say if you've got 100 of something, basing it on percentages, you could deploy 10, 15% here. If you get a dip down to these key levels, deploy 15, 20% more, keep some dry powder for down here. Versus if we do get that large breakout here, right? And then you're kind of like, okay, well, you've got 15, 20% exposure. Fine, you're in here. Maybe you add a little bit more here. But again, if price comes back down into these levels, you've still got money to add. However, if we start breaking out and holding key levels, yeah, then again, you can add a little bit more in here. Ultimately, kind of averaging your way in as you go through. What you don't want to do is panic, deploy loads of capital here, have too much capital deployed that you start to panic on the way down, then you sell it for less, and then the market rips. It's this kind of never-ending cycle, really, of how price action works. So if you're feeling overexposed, just stay away from leverage at the moment. Leverage will make you a lot poorer than it will make you rich. I know you'll see on Twitter like, 100x leverage trade and I've made whatever in a day. It's often not repeatable, and the very best people that are using leverage aren't using it in that way, right? They're using it because you'll understand more about your margin, your position size, what your risk exposure is, right? But anyway, let's start ripping through. We've got about 15, 20 minutes left in the show, and we want to cover Solana, Doge, Axon DAO, StateX, Stable, ENA, and AVAX as well for our friend Maximus. So let's rock and roll. Let's get ourselves on here. I think we did cover Solana, so let's see how the plan's playing out. I think we're going to see a lot of this, right? So key areas here, set this order block, close above it, didn't retest it. This consolidation could be ripe if we do break down further. This is very much the area that I'm looking at. At the moment, the plan was this on the daily, as long as we continue to hold the bullish gap here. I'm not looking down, but I am looking on the 4 hour right here, or sometimes lower if I don't have a clear plan on the 4 hour. We can see very similar to ETH here. This was the area, looking for this to be the flush and for price to recover this. Again, I'm not interested in shorting anything in here. If I wanted to short, I would have shorted from here, right? That's always the plan. There's always 2 plans every single day. Sometimes there's 3 plans because you just sit on your hands and you stay out of the market, right? But this here was really, really of interest. And if that wasn't of interest, then this definitely was. Break a candle, down close move, sweep of liquidity. This ends up being the deviation. Price breaks down, returns to this to be shorted. All right. Also, this untested bearish order block there as well, right? So that's what we were looking for. So now I'm just saying to myself, well, what's changed about the plan? Well, I've got a little bit of new information here, right? Because we've got new areas being built, but really what I'm looking for here is still price to come back above this level. If not, and we do start to break down, then this is the area that I'm going to add some more Solana, right? I got a lot of Solana in my portfolio, but I would definitely add more here. And I think it's shaping up to still do really, really well. Pump, dodgy, fake pal, then hawkish, then dump tomorrow. Pump today. Yes, I see what you mean. I thought you were trying to shill me a new coin then, JG. But yeah, I think the chances of what happened today are we get something like this off FOMC. It breaks down, then the market settles. Again, this is where you want to be looking at your key support levels. If you get below those levels, yeah, and then you start to break out and you get some market structure. When you start wanting to tag out these highs here, then you can start pyramiding, meaning taking short-term positions, building them into longer-term positions as we move forward. So again, Sol really clean here. As long as we add this area, we get back above here. I think this is where price rips. If not, looking down, if we close below this on the daily, I'm looking down towards the 214 region for buyers to step in down there. Let's take a look at Doge. I don't think we covered Doge on Binance, did we? So a nice clean chart. Yeah, Doge looking really nice and strong here. Again, we had a really super clean trendline break here, right? So compression in here, coming up into this, price beautifully held within here. All right. And then we get that nice kind of breakout through here. So where are we at the moment? Well, if I'm kind of looking up here, I can see a really key kind of point of resistance here, right? Price kept coming into this level on the daily. And looking at this area here. So this is a good area to target. Coming down into this here, look, resistance, resistance. This obviously, if we move this back as well, you often find that there's some confluence further back. All right, so slightly higher if we include the bodies of that, but we can see resistance, resistance, large sell-off, resistance, resistance, price breaks above, closes below. This ends up being a deviation, underside retest, price sells off, price sells off. These areas aren't just magic, by the way. I get a lot of questions coming in. One second, let me sip some tea. A lot of questions coming in about support and resistance, and people say these very derogatory things like, oh, just drawing these silly lines on a chart. And if you draw enough lines on the chart, you can blah, 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 blah. So at that point, I normally switch off from the conversation and realize that you're talking to an idiot, because no one expects the lines that you draw on the chart to, I'm not going to do this and go, right, this level here in the future is going to be what sends price to all-time high. I don't effing know what's going to happen up there, do I? What I do know is that this is a pure, unfiltered document of what price has actually done based on candles, whether you read candles, line charts, Heiken-Ashis, etc. Right? Somebody used bar charts. Doesn't matter, as long as that information makes sense to you. And what we can see here is that price got to this level. We can see more engagement with it before we even see this consolidation here as well, right? That sent price down. All of a sudden, we know we've got a blueprint on the chart here for where sellers are most active. So when you see these large breakouts from these areas, I then look for retests, right? Because then on the retest, you can look at the wicks. Yeah. So obviously, here we start to see rejection. So I would look to short this. I would have been offside, stopped out, price broke out above. And then I look for this area to hold support. It doesn't. It closes below. And then look, price, the long downsides of the wicks are showing buyers trying to get back above here. We're constantly in an auction, right? And if people are trying to push this for higher prices, right, then as we see here, we get rejection. We see the long upside wicks. This is sellers taking control of the market. Then when we start to lose these consolidations here, this is when we then target the liquidity resting below old lows or within these consolidations. We come back into the area again. We take the same process until it breaks. And here it breaks, right? Breaks strong. We don't get the retest yet. We haven't had the retest yet. So price coming back down to this area here, I would love to see this kind of candle with price wicking down below, but quickly recovering it, body closing above, and then we're looking good. Sorry, dog just deciding to come in and literally cough up a massive furball in the office. Niemech, is that how you would say it, from Poland? I'm not, unfortunately, but it is one of my favorite country and some of my absolute favorite people. I am blessed to work with a lot of Polish people, but I am yet to learn the language other than some very, very small things like dzień dobry and some other words that I can't really say live because all my Polish friends really just teach me a lot of swear words. But I have got, Dziękuję and a few other bits and pieces, maybe not quite enough to get around. So this is the key area for me here on Doge. It's super, super clean. What else can I overlay with that here on the daily? Well, we've got this small consolidation in here, so there's not really much to write home about. If we don't get the retest of this area, then realistically, what's looking to hold is this. And again, as we kind of look at on the other charts, this is our line in the sand at the moment. If price is going to have this expansion higher, if we are really going to let off quickly, then this is going to be the area we do it. But I would always advise trading with a lot of caution within this. As we move to the 4 hour, we can see how much more data we've got. Look at these beautiful V-shaped rejections here. Yeah. See how when price comes into these areas, you see, yeah, just really aggressive V-shaped rejections. Yeah. For anybody that knows my awful analogy about hot water and cold water, think of these as Inverted buckets, or a better description is one like this, right? You've got your bucket of cold water down here, or you think it's cold. You put your hand into it, it's actually boiling hot, so you pull your hand out pretty quickly. That's what gives you these V-shaped recoveries or reversals or rejections like this, right? However, when you've got the bucket of water here, now imagine this one's upside down, you can see you're not getting that quick pullback like we saw, here. Look how quickly price reversed here, for example, and the inversion of these. Price actually kind of steps into this and it's like, this water's all right. And then it breaks out the other side of it and then you move away. We didn't see that through here. And the more data and information that we've got, the better it leads us to make informed decisions. So I really want to see this area retested. If I move this down onto the 4 hour, you see a little bit more noise on the charts. What would make me, trade this early? Again, I would look at this. You'll either see this as an orange box on my chart, or normally I will just use the breaker line here, right? And that's the point that I would expect price to reject. We can see the initial rejection here as price has stepped in. This is a bearish order block or area of supply confirmed when price closes below it, disrespects it. So now when we return to it, we want to see that. And then if price does push away, if, however, we do this, we close above it. Remember, we have to close on the 4 hour. This then becomes a breaker. This is the up move before price swept out liquidity and moved higher. We have a smaller one in here, but we also have much trashier price action. Again, I'm not really looking for these. I do think any big moves today could very, very easily retrace. So again, looking for these key levels. This is the playbook. If we were to do this and move above it, I'd want to see this area hold and then push up, playing level to level. If not, I want to see price retesting this area down here. Right, so that is Doge. So let's take a look. Our old friend Axon DAO, shall we? Here we go. Right, so let's see, have we achieved the plan on this yet? I mean, obviously, I know that. I'm not going to be a twat about it, but this was the thing, right? We're looking for price to come down. This is consolidation. Bought here, told everybody about it. Bought here, told everyone about it. Again, very excitedly added some more here. And then price flashed lower. And people were like, well, what are you going to do now? It's like, well, these kind of decisions for me are always based on a very high risk portfolio, right? Not really a clear trend line on here at the moment, in truth. These are always based on the riskiest part of my portfolio. I just keep buying these on the way down because my belief is that the market conditions will at least temporarily recover to a point that will really favor risk assets. So my job then is utilizing the wide skill base of my team and anything that I bring to the table as well to find the best projects, the best people, and then that's from the point that I'm interested. So we're still within this. We're really good. One thing I really like about this here is we've now set this breaker closed above it, retesting this area now. Really want to see this hold and then use this to push price higher. As we come in on a daily, this is a really, really key area. This was a bullish gap. Price closed below it, becomes a bearish gap, right? And sorry, not a bearish gap, an inversion gap, meaning support to resistance. Yeah. So as we go above this bit here, rejection, 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 rejection. All right. This is now strong resistance. Getting above this, then I'm looking for price to move higher. All right. But this is a slightly different game for me. We can see the same plan as we kind of outlined here. The game for me is buying at these key consolidations when price moves higher, or at these points here where we see these consolidations flipped. We've just seen that on the weekly. So there were great buying opportunities all the way down here. I didn't buy this area here, and I absolutely wish that I did, but I did buy this area here, which we've broken out from. So this is looking really good. Recovered some nice bullish market structure here on the daily. We now just need to get above this level. But remember, these are the type of projects, because of the quality of the team, the industry, the application of it, everything that wraps around it, the fundamentals especially. We have a wonderful fundamental team headed up by KZM, who's just exceptional and used to be, we worked with some amazing people over the years as well. People like Chris, Crypto Assessor. But if the fundamentals look good and the technicals start to look good and we've got the key levels laid out and we've been buying this all the way down, happy days, right? Ultimately, if this thing goes to zero, I don't think that it will, obviously, based on my investment alone, then yes, Jack, yes, as the Polish say, right? It is what it is. You have to factor that into your risk management. But for me, this is super, super positive. And speaking of super positive projects that I'm excited about, leads me on to our friends over at StateX. And when I say friends, not these are my mates. I've invested in their company. These are an incredibly good company who we've known for a long, long time now, who we've become friends with certain ones of them, but not because they're lovely people, which they are, yeah, and not just because they're running an exceptional business, because of everything that wraps around it. It's an exceptional business with incredible application in an industry I'm super excited about, that I have a lot of business experience in previously within property development and building, and nobody's tokenizing this, nobody's utilizing this space, no one's looking to disrupt it as much as a StateX are. All right, these guys are at the very ultimate forefront of picking industries that are just ripe for disruption. This is a multi-trillion-dollar industry. And until now, you've had no way to invest in this, right? In terms of, unless you've got a lot of money to go and do it. Fine. If you've got some, if you've got a few $100,000 behind you, maybe a couple of million, you can go and spread that portfolio across, some. At the moment, investment in Dubai is really good, right? Because the price has come down really, really aggressively. The price against the dollar is offering really, really good value for property. You can get those properties a lot cheaper than you were this time last year or before. And let's be honest about it, they run a magnificent country, and they bring investment in from all around the world. They've got a wonderful ecosystem, a wonderful economy. It's a great and shrewd place to invest. Again, probably not getting super normal returns like you would back in the day. You want more emerging markets from that. But StateX allow you to do all of that, and you can just buy in little bits in a tokenized way. And they've got these wonderful ways of just passive income stream off the back of it. And you can build this digital property portfolio where you've got ownership of these developments that you can buy incrementally. And adding something like that to your portfolio these days, if I'd had access to that when I started my financial and investment journey, I can't tell you how much more wealth I would have today, right? But that kind of stuff was just off the table. It just wasn't possible. And these guys make it possible. So I told you I'd buy more here. I bought more here. We didn't quite get there last time, right? So someone messaged me and just said, you didn't say on the show that you bought here and you said you were going to do this. Look, I know it might seem pedantic to you, but we didn't come down to this area. My expectation is if this were the buyers were strongest, this is the area that I want to see. So I laid out the plan that I would buy again, closing above here. Yeah, to add. If not, then I'm buying here. And that's exactly where we're at. Right, price is down at this level. I think this is an exceptional buying opportunity down here. This isn't financial advice, but this is a wake-up call telling you to go and do your effing homework if you want to make money in this cycle, because there's exceptionally talented, hardworking people with a lot of resources that are doing it. So make sure you're not getting left behind here. It's going to save you FOMOing in when price gets up here, all right? Just find the good projects, understand them, read about them. They've got all the information there you need, and then look to just, feather into some of these projects at good levels. All right. Don't be the person that, waits for your hairdresser to turn around to you and go, oh, have you heard of Ethereum? Then that's the kind of time you want to panic a little bit, right? At the moment, the market's gearing itself up for some big moves, in my opinion. When we look at the risk profile, when we look at global liquidity, these are all really good things. If we look at the potential of QE coming in next year, everything is just beautiful. JG, just because prices are lower doesn't mean they won't halve from here in Dubai, all manipulated by the rich. Yeah, I suppose you could argue that the markets are as well, right? Governments can move markets, major corporations can move markets. So I suppose our job, like with trading, is to get on the side of the people that are making those moves, right? You don't get me wrong, I'm very much the contrarian. I love being the person that sits on the other side of it, more a freedom fighter than I am, stepping in to a major organized army. Shit example, appreciate it. But it's, for me, I think it's like with trading, it's you can only fight it so much. If we can understand where the institutions are buying, we can understand the reasoning behind it. And I know that might be difficult, it might be impossible, but that's why I love something about StateX. I don't have to go and put $250,000 of my own money, $1 million of my own money into a property development that I could see halve overnight. I can start averaging into that with people like StateX. And, I've looked at the others as well. StateX, they're the horse I'm backing for this, right? And we'll see where we are in 6 months, a year, 2 years, 5 years. And, I think I'm really, really comfortable with where I am with it. But these are the kind of things that are going to disrupt the world, right? these are the kind of things that are going to outlast. These are the things that are going to survive through the bear markets, in my opinion, anyway. But I do agree with you. I think there's a lot of manipulation and stuff like that in the world. So you always want to be careful and you want to watch that. But, do enough information, do enough research, and then as long as it fits your risk portfolio, give it a go. That's what I say. So that's why I'm using this as almost like a counter risk mechanism here. But it is interesting. Sorry, JG, I didn't see your message before either. All the prices are created by algos, programmed. That's why support is important, as well as fibs manufactured set for shill and pumps. Yeah, also the facts around a self-fulfilling prophecy, right? If enough people see a level as a strong level, chances are people are going to use that level. Same way as we saw it through here, right? People saw good buys coming in here, so people bought again here. I bought again here. When we lose that level here, it makes sense to maybe take some of that off the table if you're overexposed, or if you really think you're going to get this cheaper, you can sell some of it here, especially if you're a buyer here, you sell in profit. What do? Just buy it back here. So you've made your money and you buy it back for the same price, as long as you have an understanding of the dynamics of the market. And obviously it's, just one of those things you might be wrong, right? And you might lose it. Bought a SayX, like it a bit. Also UK-based similar cover. Nice, man. Nice. Smart. I like that. I think it's a really good approach. Right. So that's where we are. I'll drop down to the 4 hour here for you as well, because we are kind of between this range here. And I think that price is looking to kind of break out just back above this consolidation here. And when we look at how thin this move was here, obviously pressure on the risk market. So these things are going to take a hit in those times. But for me, a really, really good friend of mine and still one of my favorite fundamental guys in the space. And I don't think he has time to get onto these shows anymore, but Chris, Crypto Assessor, he's my favorite guy when it comes to, you see a major crash. My job at TBN is running the trading team. So I'm head of trading. Chris at the time was head of fundamentals. So we would have these meetings, we would come in, market would be crashing everywhere. I'm trying to find reason and rhyme for why it's happening, where our key support levels are, what we're going to do, how we're going to hedge, what we're going to do in terms of covering, positioning, informing membership, etc. And Chris is just there with this big smile on his face going, man, these dips are the best thing in the world, because he can just buy more of what he loves. And he's so very good at it. So before I digress further, we've got about 5 minutes left in the show, a few tokens to cover. This is why I really like a SayX here. I'm just happy to add this on the way down. All right. I think any cheaper buys in here are going to be a blessing. If we do start to make headway back into this area of demand here, then I'm looking around about the 50% area and also a sweep of this low. I think that's where we see some pretty big reactions. Stable, wasn't it? I think was... And someone asked for the one on Kraken, didn't they? Well, yeah, I mean, that's your kind of... I don't know if there's... Hang on. Let's see if... Maybe it's just been listed on Kraken, right? So Binance are normally quite ahead of the curve with these things. So let's see. Yeah, same thing, right? Just... So the 5-minute chart looks awful. Does anyone know if there's any more info? Craigie boy, no problem, mate. Thank you for joining as always. Mexi normally a little bit early. No, so it must just literally be. Let's look at the... We'll look at the Kraken one for you, mate, because you did ask for the one on Kraken. Now, I mean, you're on really, really low time frames here if you want to see any kind of strength coming in. I would just be very, very cautious with this. What I would say is, if I'm looking for what's capping the market to the upside at the moment, and you're looking for this to be a kind of explosive asset, I would focus on this area here. I think if price has the strength and the buyers step in to get price above here, then I think kind of holding this level, this consolidation above 0.205312, ideally running this high. It's a really strong move above this. Running this high so you take that liquidity, and then seeing price come back into this consolidation here, yeah, and finding buyers. And then I think there's the opportunity to get involved moving higher. Apart from that, it looks like it's just, typical launch price. Pre-market people got in really, really low here, so they just sold it. Sold it immediately, and some of them might buy it back here. And what's going to happen is this is going to really kind of dictate what happens above here, because if it runs up into this level and you see a sharp sell-off, then those people are just buying low, selling high, and price is probably going to range between these lows and this higher. So for me, I know it sounds counterintuitive buying it, a higher price. I think you're safer buying this up here. If you have great belief fundamentally in the project, then you can always average in if price comes back down. All right, that's where I would be unstable. So let's take a look at ENA. Obviously not going to look at that on the 5 minute. Okay, so nice expansion, kind of settling into this range here on the daily. Let's see if we've got any kind of weekly levels we want to be aware of. This high becomes quite key here. We can probably trace this back across to a low as well. Let's have a look. Excuse me. So that's key. On a weekly scale, this is controlling the upside at the moment. And then if we look back here for a low, what have we got? Yeah, so kind of quite a key area here. Price is consolidating underneath this kind of resistance here. We've taken out the weekly high week commencing 11th of August. We got a rejection candle here in the form of a small body pin bar or like an inverse hammer candle with a very small head. This is an area which has led to the pump currently. That level at 0.6050 is going to be interesting if we get back down there, because that's the liquidity at the lows. A lot of people will have put stops there to long this from there. So let's see how this now marries up on a daily. So daily, we've had this initial recovery of structure. Yara, good morning. And now we've kind of come back to this area of demand. So I think we could see something in here. Ultimately, we've still got liquidity down to these relative equal lows, which do sit beautifully atop this consolidation that led to this pump. So this is the area I'm most interested in, around about 0.6050 area. However, with these type of projects, this thing could run early, this whole area, as we can see this consolidation here, a little fake out, retested this, and then it ripped. So I would say if I was highlighting an area here on the 4 hour would probably be this. And then saying, okay, this is the consolidation here that led to a pretty big move higher. So dipping into this area here, again, I'm going to use the same process. I'm going to look at the up move here. Body flat higher. Sweep liquidity here, down into a nice liquidity pool or area of demand. If we hold here and the buyers are really strong, we want to see a fast move above this area, retest this here, and then move up. That's how I would look to play here. And if not, and we start to kind of break back down, then I'm looking for these lows to get run. And I think this is a really nice area. So I think either coming down into this here, or like we said, getting that breakout play there on the 4 hour. Now we're just going to finish up on AVAX. I know we've run a little bit over on this one, but always a mixture of my rambling and hopefully at least fitting in some good charts for you guys. Right, so let's have a look at this. AVAX. I absolutely love AVAX, and I think we've got a nice clean chart here. I cleaned all the Binance charts off. Oh, I didn't obviously do this one, did I? Was remiss of me, but we can very, very easily do this. Boom. Right, so quick top down here on AVAX, then we're going to call it a day. AVAX starting the recovery here, right? Came into these lows. We can see price driving into this area here, finding, close below, quick recovery of it, back down, quick recovery. So this is looking good. Higher high, higher low, pushing in here off the higher high. Where's the kind of key area to hold if I'm looking at this in terms of demand is this. And what I absolutely love about this, again, look at these upside wicks here. Remember, this is on a weekly. We can see a really key area of resistance through here. Love that. We've now broken out above that. This chart's looking really good, in my opinion. On a daily scale, we can see again, look at the spiky highs in here, rejecting price, rejection, rejection. And then look how price starts to stick to it. And one of the keys to that often is looking at those higher lows being set as price compresses in here. Flat body to the top, nice breakout. Go and check out Axel Kaibar, CMT legend, who's just one of the best pattern traders I've ever come across. And he will tell you the percentage chance of that breaking to the upside and for it sustaining. But what I do know, and certainly how I look at this, is if we were to break down here, and I'm not saying we are, but a failed breakout triangle or wedge or anything like that, if you break that and then retest the underside, you have a very high probability chance of that forming continuation, at least into the low here. But we're not worried about that right now because we don't have to factor that in at the moment. This looks good. Strong breakout here. This would be the key area to defend. Again, I like seeing retests of these levels just to give me a little bit more confidence that the buyers really are here. So any kind of move down into here plus recovery of structure, then we are long from here. But again, just kind of holding this level here, really. Just look at all these rejection wicks coming through. Strong move above, holding this. In terms of any kind of super aggressive move, if we were to look at it, because we have dipped in, we've taken out this low. Oh, no, we haven't. Oh, God, this changes perspective a little bit here now, right? Because we haven't taken out that low. The low of this candle was in at the 122s. Low of this candle here was in at the 724s. All right. So again, we can see that's higher. Again, you need to kind of come into here. Either way, flat lows like this, we can see are always of interest. All right. So let me just check that again at 724. Oh no, 8521. Sorry, no, it did sweep here. Hang on. We did get the sweep. Wonderful. That's even better news then, because this means we could be setting up here for some more upside. So many late digits on that. Completely misread that one. So that's good. So we've taken out a low here and had a really strong reaction. That's a nice pin bar candle. Bit of a long nose, but it's not too bad. So from here, I'm now looking for these bearish candles to support price. So I would want to see price above this. Yeah, we haven't set this at the moment. It's not a breaker. It's an unconfirmed order block candle, right? So I'm going to do it in black just so we know, but it's not confirmed until price closes above it, in which case, if it does, and we look for pullbacks to this area to long, all right? Until then, if price continues to break down, looking for this area, general area to hold, you know, we do have this one that was set underneath. So as long as we get some kind of bullish setup on the lower time frames here or down within here, I think we're good. But I'd rather see the upper portion of this hold. And we've got quite a nice little way to do this here now, right? Because we can see prices breaking out here. We can see the upside wicks that have just kind of been cracked above. So, you know, on a 4-hour scale, we've got these highs here. We could break out above these. Yeah. So these kind of highs in here. Why? Because there's just liquidity here, liquidity here. If we get a move like this, strong move above, then I'm looking for these areas here, right, to hold, and then we can build our plan moving higher. We do have more data in here as well, right? But while we're waiting for that daily close, it becomes a little bit tricky, or should I say treacherous, to kind of take after that. All right, guys, we're about 8 minutes over the show right now, but hopefully you found some value in that. A really big shout out to everybody that's watching the show live today, from all of our friends over at Binance to OKX and all of you wonderful people that join us from all over the world. Thank you so much. Loads of great comments today, loads of great input. Really do appreciate all of you that come on and give your time to watch this. Please don't forget, if you want to get access to our premium Discord, then OKX are going to give you that for free. So you can get it free for a month. You just go along, follow the instructions, you can find it. It's all laid out on the top of the Burb Nest Twitter profile. And if you're struggling with it in any way, just come and hit me up on Twitter and I will go and show you. So just again, if you do want to follow me on Twitter, you can go and find me over here. All right, at BC_Richfield. And reach out, drop me some comments and that. And if you're interested to learn more about what we do over at the Burb Nest, you can find some more information down in the description. Wishing you all a fantastic week ahead. Remember to keep an eye on FOMC later. And I look forward to being back live with you all on Monday.